The impact of medical debt on your credit score. You always hear about credit card debt, car loans, mortgages. But what if I told you one of the biggest threats to your credit score isn't any of these? It's medical debt. And millions of Americans are blindsided by it every single year. Today, we're pulling back the curtain on how medical debt truly impacts your credit and why ignoring it could cost you far more than just a few late fees. Let's get into it. 1. Understanding medical debt. How it differs from other types of debt. Most people think debt is debt, whether it's a credit card, a mortgage, or a hospital bill. But when it comes to your credit report, medical debt is treated very differently. Here's why. Medical debt isn't voluntary. Unlike taking out a loan or applying for a credit card, nobody chooses to rack up medical debt. It usually happens because of emergencies, accidents, surgeries, sudden illnesses, things you often can't predict or prevent. The reporting timeline is different. Under the current guidelines from the major credit bureaus, Experian, Equifax, and TransUnion, medical debt won't appear on your credit report for 12 months after the service date. That's right, you get a full year to resolve the bill with your provider or insurance company before it hits your credit. This rule was updated in 2022 to give consumers more breathing room. Because let's be honest, medical billing errors are incredibly common. Smaller debts are treated more gently. As of 2023, any paid medical collections no longer show up on your credit report at all, and unpaid medical debts under $500 are excluded from credit reporting. So if you're sweating over a $200 urgent care bill you paid last month, medical debt is weighted differently by FICO. Credit scoring models like FICO 9 and a FICO 10 give less weight to medical collections compared to other types of collections, like credit cards or personal loans. A medical collection hurts your score, but not nearly as badly as a delinquent Visa payment or auto loan default. But, and this is key, older scoring models like FICO 8, still widely used by many lenders, do not differentiate as much. So depending on who pulls your credit, a medical collection could still cost you 50 to 100 points or more. 2. How medical debt typically lands on your credit report. Here's how most people end up blindsided by medical debt damaging their credit. Insurance disputes or errors. You think your insurance will cover the bill, but a claim is denied or partially paid without your knowledge. The balance quietly lingers until it's sent to collections. Provider miscommunication. Hospitals and clinics often don't aggressively pursue unpaid balances directly. Instead, after a few mailed notices, they quickly sell the debt to third-party collectors. And collectors don't wait around. They report to the credit bureaus within weeks after buying your account. You never received the bill changed addresses, clerical errors. Sometimes you legitimately never receive the bill, but it still becomes your responsibility. Unfortunately, in the eyes of collectors, "I didn't get the bill" isn't a valid excuse. According to the Consumer Financial Protection Bureau, over $88 billion of outstanding medical debt appeared on consumer credit records as of 2022, and nearly 1 in 5 Americans have some form of medical debt in collections. 3. The emotional and financial fallout of medical debt. Medical debt doesn't just hurt your wallet. It weighs heavily on your mind too. Mental health strain. Studies show medical debt leads to higher rates of anxiety, depression, and even divorce. Financial setbacks. A low credit score means higher interest rates on everything, from credit cards to mortgages to car loans. That $2,000 hospital bill you didn't even know about. It could end up costing you thousands more in the long run via higher borrowing costs. 4th, medical debt collection versus regular collection accounts. Once a medical bill lands in collections, it becomes a collection account like any other. There's no special medical category once it's on your credit report. Some lenders, especially mortgage lenders, like those following Fannie Mae or Freddie Mac guidelines, may overlook medical collections under certain conditions. Others might still heavily penalize you, especially if you have multiple collections listed, medical or not. 5. How medical debt affects your credit score. Now that we understand how medical debt gets onto your credit report, let's talk about how much damage it actually does, and why that damage is evolving right now. Medical debt can still lower your score. When a medical bill goes unpaid long enough to enter collections, it appears on your credit report as a derogatory account. That automatically dings your score, sometimes by 50 to even 100 points or more, depending on your current standing and credit history. Severity depends on your overall credit health. If you already have late payments, high balances, and other negative marks, one more collection, even medical, could push you into poor or very poor credit categories. If you had spotless credit before, a single $800 hospital bill sent to collections could cause a dramatic drop. Medical debt versus other types of collections. Thanks to changes in scoring models like FICO 9, FICO 10, and Vantage Score 4.0, medical collections are weighted less heavily than other types of derogatory accounts. But here's the catch. Many lenders, especially mortgage lenders, still use older scoring models like FICO 8, where medical collections aren't treated any differently. So depending on who pulls your score, that lighter touch may not actually protect you. 6. Big recent changes that help consumers. Paid medical collections are now deleted. Starting in 2022, all 3 major credit bureaus agreed to remove paid medical collections from consumer credit reports. Waiting period extended to 12 months. Before 2022, unpaid medical debts could show up after just 180 days. Now, you get a full 12-month grace period to resolve disputes or insurance claims before it hits your report. Small medical debts are excluded. As of early 2023, medical debts under $500 are no longer included in credit reports at all. 7. Key stats to keep in mind. Over 100 million Americans currently have medical debt. Around 43 million Americans have medical debt listed on their credit reports. Medical debt accounts for 58% of all third-party collections reported on consumer credit files. Think about that. Medical debt is the single largest source of collections, more than credit cards, personal loans, utilities, and auto loans combined. Want even more expert tips on mastering your credit? Subscribe to this channel and check out our full library of videos on credit repair, debt management, and financial freedom. Need professional help repairing your credit? Visit wiseconsultant.com, where real experts, not bots, fight for your financial future. Don't let outdated information or mistakes cost you thousands. Take charge of your credit, starting today. At Wise Consultant, we specialize in expert credit restoration services tailored to your needs. Visit wiseconsultant.com today to take charge of your financial future. Wise Consulting Enterprise. We could help you in such.